So we're seeing some nice recovery streaming through across the board, a lid seeming to be put on risks for now. But caution is still out there, and on that basis, many saying that a sustained stock rally may have to wait until the full impact of the Japan crisis becomes clearer. How are you reading the market scenario?
Oh, Alishia, I think we're having technical difficulties. There's some noise in the background there. I'm sorry, I did not hear that question properly.
Taking a look at the market's picture right now, how are you reading the market scenario? Because certainly there seems to be renewed positive momentum that's filtered through to the market. The question surrounds sustainability.
Yes, sustainability is the big question right now. I mean, look, the G7 came in this morning and there was an emergency meeting where they intervened for the first time in 10 years to help Japan out. So there seems to be some kind of lid put in the, the questions as to whether, there will be some kind of rescue packages for these ailing economies or these disaster zones. But yes, I think it will be interesting going forward to see whether this can be sustained. There still are major risks as far as Libya, Middle East, as well as the recovery in Japan is concerned, but there seems to be some steps and measures to be taken to resolve that. So yes, a lot of sentiment now improving in the market. We also saw that yesterday the initial jobless claims in the United States were good, which prompted buying in the market and some bargain hunters coming back into the market. I think also FedEx yesterday came out with an outlook statement that was very positive, and FedEx is also a proxy for global growth. So that was also very, very positive sentiment for the market, and we started off on a very good day today.
And that's exactly it. I mean, we've had that FedEx forecast in terms of outlook and growth prospects underline the fact that there are still companies boasting solid fundamentals at this stage, and that's where bargain hunters are delving in at this stage. On the local front, which companies stand out for you in that regard?
Oh, Alishia, I think it's, the entire bourse. I mean, if you look at the whole top 40, it was pretty much sold off for the past 2 weeks since the Japan quake, and actually before then, since the Middle East issues and the Northern African issues started. So there's a lot of cherry picking that can be done. There's a lot of low-hanging fruit, a lot of people that can get involved. But I think, if you look at companies like Naspers, who were doing very well the whole of last year, and, but now of late, because of Tencent's, very subdued growth forecasts and very subdued dividend forecasts, that has come back quite a lot, down 4.4% yesterday, and today down about just over 1.6%. So, a lot of people getting out of there. It's now at its November 2010 prices. So,
Well, that, of course, just one company to be paying attention to within the resources space, and that's a sector that's been standing out amongst our traders when we're chatting to them about where value is to be found. It's those platinum players that are seeing some nice recovery today. Northam up close enough to 2%, Anglo Plat trading 1.4% higher. What's your view on the platinum players right now, given what's happening on the underlying platinum price?
Platinum is not really one of my favorites at the moment. I think basically because of what's happened in Japan, vehicle production will be very slow there. I think also with the United States, there's lots of stockpiling of vehicles still in the United States. So, lots of industries that is still to be sold off there. And I think there's just been a general sell-off in terms of the platinum price. If you look at it from the beginning of the year, it's been a bit of a sell-off in the platinum pricing, with China also hiking up demand and therefore hiking up interest rates and therefore affecting the demand there as far as jewelry is concerned, as far as vehicles concerned. And if you look at prices, stocks like Lonmin, where the price is actually set in London, a lot of players there are actually short platinum stocks and also short general miners. And I think we've seen a big switch also from the underlying equity position or the underlying stock into ETFs rather, because of the risks that are so involved in holding the actual stock. So right now, I'm actually quite bearish when it comes to platinum.
Of course, to bear in mind is that Northam is trading ex-div today, and that share price, just to reiterate, trading close enough to 2% to the upside. Let's take a look at some of the other players in that space. Your diversified, the likes of a BHP, the likes of an Anglo, even African Rainbow Minerals. It's sitting top of the top 40 in terms of performance today. How are you viewing your diversified?
Yeah, I think, look, if you look at Billiton, they are the biggest diversified mining house in the world, and they're certainly going to benefit, from a lot from a rebound in the minerals side of things, and also from general miners. I think they're going to benefit a lot because they're so diversified, and also they're a major energy player. So, with the recovery that we expect or anticipate out of Japan, I think, Billiton is going to be in the forefront there, and we'll see some nice rebound from the diversified miners.
Well, taking a look at commodity prices, that oil price is certainly on the radar screen with all that's playing out in North Africa and the Middle East. Ntombenhle, what's your outlook in that regard? Because we've got that rising price once again on the spotlight, and implications on global growth via implications on inflation posing considerable risk.
Yes, absolutely, especially for our markets. As Jill Marcus has reiterated enough times, that there are some worries as far as food and oil inflation, or which are the exported inflation into our economy, are concerned. And I'm sure that's very relevant all around the world. So it does pose a bit of a risk. It was interesting, we saw earlier when the focus was mainly on Japan, how the oil price retreated to about the 107 level, 106 level. But now it's back up again, as renewed interest in the Middle East crisis, comes into play. So it will be very interesting going forward. And the only way really that it can actually come back to perhaps the 105 level is if there's some kind of, a truce or some kind of peace talks that start in the Middle East there. But, we don't know. But for sure, there has been a structural shift in the oil price. We no longer will be seeing prices of about between $75 and $85 that in the oil price that we saw the whole of, or for majority of last year. I think, we've come to a new base rate of maybe $103 for the oil price. But, only time can tell where we will be going there.
Of course, these headlines that we're seeing coming through from various parts of the world have to be taken into consideration at the same time. Nothing can be read in isolation. Just very quickly, we saw a G7 intervention in terms of currency intervention coming through, and that hasn't been done in a decade or so. It's certainly what knocked the rand, but the rand springing back again. Yes, we're above that 7 mark, but still proving to be quite resilient still, Ntombenhle.
Yes, it is quite resilient. I think the rand is, it disproves a lot of theories and a lot of fundamentals. But yes, it has benefited quite a lot. But that intervention just goes to show the dire situation that's in Japan. They're trying to mitigate Japan's export and trying to buy dollars. Buy dollars and sell yen, just to improve that economy, and to also make sure that they don't run out of cash in this dire situation that they're in. But yeah, at least it does show that countries are willing to step in a time of crisis and actually help the economies going forward. So it's very good for sentiment.